Good morning, everyone, and welcome to How to Access Bank Financing, the Detroit Regional Chamber's Black and Diverse Owned Business Series. I'm Tammy Carnreich. I'm the Chief Operating Officer here at the Detroit Regional Chamber. And throughout 2021 and now into 2022, the Chamber has been proud to host a series of events to help small, medium, and large diverse-owned businesses in Southeast Michigan to grow or to get back to where they were at maybe a couple of years ago before COVID hit. It's a series is all part of the Chamber's overall racial justice and economic equity initiative that started about 18 months ago. The ideal region for Detroit, obviously, is an equal and fair community where all of the people have opportunity, resources, and tools to achieve their potential, lead healthy and fulfilling lives with rewarding work. This leads to a more robust economy overall for our region, our state, and also for a greater community well-being. I encourage you to visit detroitchamber.com/equity, and that's where you can learn more about the Chamber's efforts to advance racial justice and economic equity. There you can also find past programs that we have put on so that you could see those, and you'll be able to watch for future. I do want to, though, before I turn it over, I need to thank Blue Cross Blue Shield of Michigan, who is our sponsor of our Diverse Owned Business Series, and we could not be doing all of this production without their help. And additionally, I thank you, special thank you to our partnership with Pure Michigan Business Connect through the Michigan Economic Development Corporation. They have been very, very helpful in helping us with our programming, and they also will be doing some special programming regarding to procurement. So again, watch our website at detroitchamber.com/equity so you can learn more about that. So at this time, it's my pleasure to turn the program over to today's moderator. Paul Jones is the Business Support Network Director for Invest Detroit. And he's participated in previous webinars hosted by the Chamber regarding small business access to capital. Paul's going to introduce the panel and moderate a question time with them, and then we'll open it up to questions and answers from our audience. I would remind you that on the right-hand side of your screen, you'll see there's an area for chat where you can enter questions that will be helpful to Paul when we get to that point in the agenda. That'll be about 35 minutes from now. And so I guess at this point, there's no better person for me to turn it over to than to Paul Jones. Paul, thanks for joining us today.
Thank you very much, Tammy. And thank you to the Chamber for hosting this series of events. It's so important, especially the access to capital, which remains a considerable issue, especially with underserved businesses in this pandemic environment. There are countless case studies, surveys, including one done by one of my supporting institutions, the New Economy Initiative, that surveyed over 600 businesses throughout Wayne County. And time after time, consistently, access to capital percolates and surfaces to the top as a barrier to their growth and survivability. As Tammy mentioned, this is a sequel. We did a webinar a couple of months ago where we provided tremendous resources about how businesses could become more capital ready. I certainly advise you to look into that webinar, as I think it gave some really great points. It was a dynamic discussion. Today is a little bit different. Today we're going to look at the other side of the coin. While the onus is not all on the financial institutions about how to solve this access to capital gap, they certainly can play a role in solving it. They have a lot of resources, and they also can change the way things are done in engagement between small businesses. So today we're going to dive into this issue. We understand that access to capital is a huge issue with various layers, sort of like an onion. And also like an onion, every time you dig into one layer, you want to cry a bit more. But fortunately, we have a great group of partners with large financial institutions that can wipe away our tears and help us solve this issue together. And they're also playing their role in solving this issue. So without further delay, I'm going to introduce our panel, and actually I'll allow them to introduce themselves, and then we're going to dive into this issue and determine what they're doing to solve this issue and how we can further engage with them. So without further ado, I'm going to start with Jason Tinsley. Can you introduce yourself, Jason?
Well, hello, everyone. Good morning. My name is Jason Tinsley. I'm so glad to be here. I'm the market chair for Michigan for Jpmorgan Chase. I've been at the firm for 20 years, and I've enjoyed spending so much time in several lines of businesses. In my role currently, I work with all lines of business, specifically our small business channel, business banking channel, commercial bank, to really help drive some of the efforts we're going to talk about today, and to really hopefully create an awareness on how we can best serve the community and for all the people that join us today. I see we're almost up to 95 people. Hopefully we get to like 500 people because we want to really help some people today, Paul. I look forward to helping.
Hey, thanks, Jason. And next, Mohammed, can you introduce yourself, please?
Yes, good morning, Paul. Thank you. And my name is Mohammed Hamoud. I'm the Small Business Performance Manager for the North Central region at Bank of America, and I oversee the Michigan, Tennessee, and our Chicago areas. And essentially what I do is I strategize to help find ways to support our small business communities, and help, gain the access to capital. So I'm excited today to be here to have a great discussion, and to hopefully, all the audience can walk away today with additional information to help the business grow today.
Perfect. And Eric Dietz. Eric, happy to have you here. Can you introduce yourself too, please, sir? You're on mute, Eric.
How's that, Paul? Is that better?
Perfect.
All right, thank you. Sorry about that. Eric Dietz, I am the regional president here for Huntington Bank in Southeast Michigan. I've been a banker in this market for over 30 years. The thing that's always bothered me is people's view that banks are really looking to lend money to people that can prove they don't need it. And that needs to stop. We do a lot on the SBA platform here at Huntington, but really looking forward to a robust discussion with my peers here to talk about what we can do to make access to capital that much greater here in Detroit.
This is really exciting. Again, we can go about trying to sweeten the ocean with one teaspoon at a time, or we can get the big partners to the table and really attack this. And again, I want to just break it down to different layers that create this barrier. And there are multiple layers to this thing. So we're going to do that. And here's the framework. I'm going to ask each of you what we've identified as a contributing factor to this huge problem that we have on our hands. I'd love to hear your thoughts on how much this factor plays into the equation, and more specifically, and this is where I put you on the spot a little bit, what are you and your organization doing to solve this issue? And what does success look like to you as you guys go about looking to solve this issue? So I'm just going to throw out a couple of factors to each of you, and then if someone wants to chime in at the other end and tell about some other compelling stories or programs that they have at their institution, please do, because we really need to get to the bottom of this. And Eric, I'm going to continue on with you because you raised a couple of good points. Awareness and trust, especially in our community, has played a huge role from my perspective in creating this barrier to access to capital. So making sure that our underserved business owners know that you have these programs that are meant for them, that they can engage in. I mean, one program that you guys have is a Huntington Lift Small Business Program, which is a pretty lucrative program, but many people, I would dare say in this call, may not even know that exists. And so, and furthermore, and excuse my bluntness, but they may not think it's for them. They may not trust where the messaging is coming from. And trust, again, systematic issues and all that put together creates a big barrier. So I'm gonna put you in the spot here, Eric. What are you guys doing to stop that, and what can you do to better that situation?
Yeah, thanks, Paul. I mean, those are two big issues that we've dealt with. And really what I would want to do is take the audience back to the payroll protection program that we ran into a couple years ago. I think that really woke a lot of us up as institutions and it woke a lot of business owners up to the fact that they didn't have a banker. Many business owners go to banks and they go to institutions, but they don't have possibly a personal relationship with somebody that's their advocate that can really go to bat for them within that institution. When PPP hit, it was a big deal because there was a race for those dollars. There was some concern that the money was going to run out after the second round. And I think a lot of us in the banking environment and financial institutions learned that we need to do a better job of making sure that some of our business owners had better connectivity. So when we came out with our $40 billion community plan, one of the programs which you mentioned is Lift Local. And it really is designed differently than what we've done in the past. We've done a lot of SBA lending, and that typically has the ability to pull people into a specialist. And we only have so many specialists in each market. What we do is with Lift Local, to really talk about awareness as being the key point, is it's delivered by every single branch manager. So we're not relying on the SBA team or 3 or 4 people to really deliver that product and build a relationship. So what we're hoping on and banking on, pun intended, is that our clients build that relationship first and foremost with their branch manager. That is an accessible portal for us. It's one that we take a lot of pride in. We happen to have more branches in the state of Michigan than any other institution, and that's why we built this around that platform. And we think trust comes from there, Paul. So once you develop that relationship and once you get comfortable with somebody in the bank that's your person that can help you, we feel trust is built substantially from that point on.
Great, thank you. And I see many Huntington representatives at various community functions and looking to meet people where they are. So that's certainly appreciated. And I'm excited about further collaboration. But I'm going to move on to Mohammed and talk about the other piece of it. And Mohammed, Eric brought PPP. I wasn't going to go there, but he went there. So now you're gonna sort of take the brunt of this question. But financial readiness is also a component. And I think in the past, I'll be straight. Many banks have said, companies aren't ready, can't give them a loan. That's we feel bad about it, but we have to leave that there. That's not really our business. And I think now we're as a community coming back and saying, make it your business. How do you? Mission-based lenders are doing their part, but the institutions have to step in a more meaningful way. The notion is that because there's so many decline rates, the notion is that businesses or banks don't want to lend to small businesses, which we know that's not true. That's part of your business model. So how do you take more of an active role in helping businesses become financial ready and solving that issue, or do you think that that's part of your role in this ecosystem?
Yeah, and Paul, it's a great question, and I can spend an hour talking about this question because there's just so much to unpack over here. But really, I guess I'll take us. I was a small business owner myself prior to getting into the banking industry, and I come from a minority community. And so, as a business owner, for me, what I went through is I didn't think I was ready. I didn't think my company was ready to get the access to capital. And I had the opportunity to really excel the business and grow the business, but I wasn't educated on that. And unfortunately, I churned some great offers away. I ended up closing the business, and then I joined the banking industry. Naturally, I gravitate to small business, and then I learned how much impact the banks can have on small businesses and even in minority communities. And so it became a passion of mine to get that information out. How fast can we get out to as many business owners as we can to help them understand what's available to them? And so when I think about financial readiness, I wanted to find a way to articulate this in the best way possible with the short time that I have. So I broke it down into 3 aspects. So if you're a business owner today, the first thing I would say is, are you with the right bank for you, for your business? And the reason why I say that is every financial institution wants to help, but every financial institution has their own appetite. So what a Bank of America may lend to and what they may not lend to, another institution may lend to that. So it's important for a business owner to know, based on my business and my industry, am I with the right bank? First, understand that once I've identified the bank that can support my business, then it's important to start to get to know the small business specialist within that bank that can help advise you on how to prepare your business and get ready. So what are the underwriting guidelines to help gain you the approval to get access to capital? Now you can put a plan in place for your business to show the right trends and where you are. And then finally, when you analyze your own business, analyze the industry that you're in. It's important to understand this specific industry that you're in. How does your business compete compared to the industry that you're in? Are you on pace with your industry averages? Are you ahead of pace? Or are you behind pace? And these are the things that allows you to analyze and really understand, am I doing enough for my business to position myself in the best way possible? So I think when we tackle these three aspects for a business owner, now you can come to a financial institution ready to gain the access of capital that you need to grow your business. And I will say to all the audience on this line, when it comes to access to capital and financial lending, the last thing an institution will look at is where you're from or what community you're from. We want to lend, and the one common denominator that we look for is cash flow. Does your business cash flow, does it support to be able to pay back, the debt that you're requesting? And so the way I've turned this to our clients to help them better understand is simply asking them the question is, if you put yourself in the shoes of the bank, if someone came to you and asked you to borrow money from you for their business, what questions would you ask? What would you like to see to feel comfortable to give your money to that business, knowing that they'll be able to pay you back? And that's what it comes down to.
And thank you for that. I mean, this is, I want to stay on this topic and open up a bit more to the panel. There are some steps to making yourself to do all those things that you said, and feeling comfortable that you have your financial ducks in a row. Have you seen, and this is for everybody in the panel, have you seen that many small businesses aren't at a point where they are ready to have a conversation? And then where do you send them? Do you have internal resources around that, or are you sending them to different people in the ecosystem to help them? What do you do to retain their interest and keep them at the table rather than sending them away empty-handed?
Take that.
Jason.
Can you hear me?
It's a little bit muffled.
Uh-oh. All right, let me make sure. Is that better?
Perfect.
Okay, sorry about that. But yeah, I'll take that, Paul. When you look at micro businesses and businesses that are just really starting out, I mean, we had to come to the table to figure out, with all the traffic that was coming into the branch or the phone calls that were coming in to help businesses even before and during the crisis, and specifically with PPP, was a lot of these were fledgling startups and they needed resources. So they definitely needed capital and access to capital, but they needed the resources first. So we decided to take a step back and figure out, how can we be collaborative, how can we be cohesive, and then how can we really leverage the community to get the answers that were needed to help the businesses that were coming in for support. So our approach at Jpmorgan Chase was to really look at a way to maybe go to some of our community partners that were already doing the work. They were already out in the field, and say, what do we need to do to access the actual clientele? And to give you an example, we decided in the midst of PPP that maybe we should go ahead and not only leverage the branch managers, as Eric said, but then let's really look at how we can put people in the branch in the form of a consultant, like a senior business consultant, and really help with the whole start all the way through and to the finish part to even apply for a loan, right? So taking a step back and saying, let's make sure you have the right resources. So we decided to use technology like we're doing now, and we put up and established webinars where we could actually reach people. Because remember, not only was it the crisis, but people really weren't comfortable always walking into a branch, and they still needed support. So we decided to go right to our clientele, potential clientele, and stand up actual virtual events that can really walk them through the process. Many of this information is still out in the system, and then what we'll do is I'll give you information how to access this later so people can go to it. But just to go a step further, I hope you guys don't hear that. I know like something's ringing in my office. It's just terrible. I apologize. Hang on one second. I didn't expect that to happen. Last point I'll make real quick is, sorry for all those that had to hear that. We wanted to make sure that we were very deliberate and focused on who we felt got impacted the worst, which were diverse businesses, Black and brown people, women, especially in Detroit. We have 17 branches in Detroit, and the amount of information that we took in about what was needed, it gave us a blueprint and a plan, not just locally, but nationally, to go ahead and stand up an entire division to focus on the educational process. From that, we were able to get them what they needed to go apply for the loan. And maybe it wasn't with us. As Muhammad said, maybe B of A, they were already there, was a better fit, but we equipped them to go back into a B of A office or a Huntington office and actually get the resources because they were prepped by us. And if we could help them, fine. But the one thing I think we all can agree on is that we have to step in and do this together. From that, we took a strategic approach to really focus on the low to moderate income zip codes, many of which are in Detroit, to make sure that each of our branches were equipped to roll out the educational process. We worked with organizations, CDFIs, to really make sure that we got to the people. And so far, so good. It's been a lot better as far as the educational aspect and the coaching, and making sure that when people sit down with a business banker, that all their ducks are in a row, all their information is aligned, so they can apply for the loan the right way the first time.
Paul, do you mind if I jump in on that readiness comment?
Please do.
Going back to our Lift Local program, one of the things that we thought and we built into it is an educational component. So in addition to making the loan, we felt the need to offer up education around running a business. And instead of creating our own, we went out to John Bryan's Operation Hope. So if anybody out there is interested, it's a wonderful program that's already been proven to work in so many different communities. And it really just gives them a lot of basis for running a business. It's probably better to know before you borrow money if in fact this operation might be losing money. We know at times things have to ramp up, but it really does a good job of vetting out the operational plan, talent management. They do their own business plan within this self-guided online portal, and we just think it makes sense to combine education with the loan. Now, if an experienced business owner comes in and wants a Lift Local loan, they don't have to take that program, but we highly encourage all of our borrowers to go through the portal.
That's amazing, and there's so many resources out there that have been lifted up or come about in the past few months and over last year. So making sure that our businesses have that educational component and have access to it is so key. I want to dig into that a bit more. I know one bank that's highly focused on education and being in the community is First Independence, and one of our guests who I didn't have a chance to introduce before, Mr. Kenneth Kelly. I'd love for you to introduce yourself, Kenneth, and then tell what you guys are doing at your institution to solve some of the access to capital issues, especially on the education side.
Paul, thanks so much for the introduction. I'm so proud to be here with my fellow colleagues in this space and making a difference. What I could say to you is that this is certainly a challenge, as we know. Many of the things you heard Jason and Eric talk about just a moment ago are just the absolute truth. I mean, it's just the reality that we deal with. But what I think is important is we need to have more dialogue like we're doing today, and figure out how do we create shared learning and create as learning, Think and Grow Rich, the mastermind process, so that we can really help our customers capitalize on all of these different opportunities, because it's overwhelming, to be candid with you, what's available. But the reality is we're not getting enough there. And my metaphor for that is it's almost like trying to put out a house fire with a water hose. It's just very difficult to do. And so you need a lot of individuals standing there with water hoses to really put the house fire out, is the way I would metaphorically state it. But to quickly close, I'd just like to say thank you for having us here. This is part of our mission. We've been around now 52 years, with just recently expanded last week into the Minneapolis Twin City area, with the hope of hopefully being a beacon of hope.
So you laid out a couple of interesting points, and also we were discussing accessibility. So I'm going to open up this to the audience as well. When we look at PPP round one, the numbers were be quite frankly, it confirmed what we sort of knew, but it was nonetheless very, disgusting what we saw around how many small businesses, especially in our communities, were left out. In round two, the issue was not as pervasive, but we saw more fintech companies step in rather than the traditional banks. So what are the learnings perhaps that you've seen from fintech companies, how they're able to get access to certain population segments, just to be straight, how they are able to serve some of the underserved in a meaningful way where our traditional institutions weren't able to do it, and maybe that sparked some of these programs you're talking about. But I'd love to hear your thoughts on that.
Paul, was that directed to me?
No, well, if I step on your toe, Eric, no, I mean it's everybody, whoever wants to
Okay.
jump into that.
I'd love to jump on Kenneth's comment about fire hoses. I mean, the more the merrier. I mean, as long as we have institutions out there like the ones that we have today, and the fintechs and obviously the MDIs are really being asked to do more, and we're all being asked to assist any way we can. But I'm all for as many opportunities as our small business owners have, the better. I also want to talk about what Mohammed said, is that just making sure that you're with the right institution, because it could be that your business is fine at a certain point with a fintech, but it may need to graduate into something that's got a little more robust capability. So I think that's the other learning of PPP that Mohammed brought up, is that you have to try to figure out what's the right institution for you. We do try to do one size fits all. We all have small business, we have middle market, we have specialties. But I'd recommend working with your CPA and your attorneys, and really trying to figure out what institution might be the best fit for you and your business.
So Paul, not to rehash PPP, I think we're all trying to get past PPP given what we all went through. But, one of the common issues that came up, the PPP process, and I always tell business owners, don't judge the institution that you're with because of PPP, because, we saw clients leave our bank because of their experience, but we saw a lot of clients come to us because they're other banks. So I think it was common everywhere. It was a very fluid situation, right? This whole thing was put together, in a matter of, days, rolled out, and it was a fluid, constant changing of guidelines by the SBA, day to day. And so what we were doing yesterday was different today. So it was a lot to manage. And then, when you think about large institutions, the challenge that we had, Bank of America, and I'm sure Chase went through it as well, is, we a large clientele, we took 500,000 applications within 48 hours. I mean, we haven't done 500,000 in the last decade. We took that in 48 hours. So you can imagine the capacity there. But what we found was two scenarios that were common. Either you had those businesses that were really in tune with their CPAs, their attorneys, really had a great relationship with the bank. And so all of their operation was up to date. And that was an easy process to go through. And then you had a lot of businesses that were outdated. We had so many businesses that had started as a sole prop, and then throughout their time in business, they created an LLC, but their business was not updated on the system. Their tax ID wasn't reflecting. We're still, linked to the Social Security number that they started 10, 15 years ago. And then that ran into issues because of these things. So that was eye-opening for us. How many businesses are operating right now that are not up to date? And we need to get in front of them, and they need to come to us to ensure, it's the responsibility of business owner to make sure that where they bank, where they are, that everything is up to date. And we try to reach out to as many as we can. But at the end of the day, the economy that we're in today, small business is flourishing, and we're seeing more small business open up than ever. And there's starting to become an overwhelming amount of small businesses, which is a great thing. But at the same time, the ratio may have been 1 to 400 per banker. It could be up to 1 to 1,000 today. And so that capacity becomes difficult. Now, one thing that we've done to address this as well is, as was mentioned by Eric and Jason and Kenneth, we're building our digital platform, investing a lot of money in there because that's where people go today to access information. So we're trying to provide as much information and as much learning, from those digital platforms. But then it always comes back to, you don't know what you don't know. And this is where that personal touch comes into play, that you still need to sit with someone to understand and tell them what you're going through so they can help you and guide you through what you don't know. Because you can only research what you know, right? So that's what we're trying to collectively, get to as many business owners as we can to help educate them.
Yeah, just to add on to what Muhammad said, and he's spot on. Making ourselves accessible was super important, but having to be proactive and go out in the community, I think, was even more important. Yes, PPP affected all of us and impacted all of us, especially large institutions, because of how much traffic was driven to us in the first 48 hours or the first couple of weeks. And so we didn't always get it right. But it's more important when you get something wrong to have a learning from it and then be able to improve. And that's why we were so hyper focused on making sure that we hit the grounds where we knew people were already going to seek information if it wasn't a traditional bank. And typically it was what we would consider to be partners in the community and nonprofits that were focused on helping businesses and helping people that were in the community get access back to Huntington, B of A, First Independence, and Chase. The other thing that we decided was important to do was maybe even reinvent and recreate the branch experience to make sure that when people came in, it was welcoming. So across the country, and specifically here in Corktown at the old ballpark, formerly Tiger Stadium, we opened up a new branch that was really focused on making it inviting to the community. I've been there 7 times and I still don't know what a teleroom is. It's not, that's not the focus. The focus is on making sure that people can sit down in a comfortable and inviting setting and be able to ask questions and get the information they need so they can see us as a resource first and not somebody that's trying to put them into a product or send them down a path applying for a loan when they're not quite equipped. And that has led to several opportunities to deploy capital because we went through the process first of being more consultative. We currently work with over 90 nonprofits across Southeastern Michigan, mostly in Detroit, to really get the word out. And we're putting and staging up several events to make sure. Here's an interesting fact. Pre-COVID, there were 50,000 owned businesses in Detroit. A lot of single member LLCs, small businesses, but nonetheless, that's what they were. Post-COVID, we're down to 33,000. Our goal is to make sure that those 30,000 that survived have the resources to grow and flourish, and then go back and try to get the other businesses that may have consolidated or closed up, if they want to get back into the game, to make sure that they have the resources that they need to be successful. What we would like to see at Chase, and I'm sure other companies have their goals too, is to be able to really focus on being intentional about getting to 15,000 new minority businesses over the next 5 years, to really take them from micro to macro as far as size and scale, and to really help them be able to flourish and hopefully move up our ladder from small business to commercial bank to investment bank, because that's going to help our city, right? When people can see that I can grow a business in Detroit and in Southeastern Michigan, that's going to attract new talent to want to come be here. We were strategic about putting that branch in Corktown, which is one of our revitalized and up and coming communities, because we thought it was signal that we're in Detroit, but we're in a place where people can really feel like they can grow their business with that whole Corktown ecosystem that's starting to take place here in Detroit.
Yeah, I appreciate that. And that leads to one of the next questions. And I think one of the words, 2020, one of the words was pivot. And I know what 2021 was, but I think 2022, I think one of the key words we're going to hear a lot is outcome. And not just what activities we're doing, but what type of outcomes we're reaching for. Jason, and banks traditionally are matrix-driven type of organizations. So Jason, you did a great job of indicating what success looks like for you and your organization, what type of matrix you have. I'd like to have the other 3 guests, Eric, Mo, Ken, what does success look like for you and all of these different wonderful programs you have? What does it look like, especially from a diversity and inclusion standpoint, especially when we're looking at the underserved businesses that have bared the brunt of a lot of the things that happened during the pandemic? As you guys launch these programs and you look 5 years down the road, explain what your vision of success is.
I can go first, Paul, with your question. So for us, the 2020 was eye-opening for, everything that we went through, as we just discussed. So Bank of America made a commitment, a $1 billion commitment over the next 4 years, that they really want to use that to, to come in and to help in different categories. And one of them was small business. So I'm going to focus on the small business part of this commitment. And what we did is we invested and we acquired approximately 4.9% of common equity from 7 local CDFIs. Because what we realized was, as much as we want to do, there is still a barrier between, minority communities and what is, seen as a big bank. So I'm happy to announce that, one of those 7 CDFI banks, that was First Independence Bank. So we, by acquiring 4.9% of common equity, it was our way to be able to provide, equity capital to First Independence Bank, because we know that they're doing the work. They're doing the work locally. They have the trust of the local community. So if we can support a First Independence Bank, and through them we can funnel, what we need to, that would really help, get the small business, the help that they need to grow their businesses, and then watch them grow, and one day get to the point where maybe they want to go national, global, and we can help them with that aspect as well. So that's one thing that we took initiative in doing for that. And then the other thing too is local organizations within the community, such as, Invest Detroit and Tech Town and More City Match, and the different organizations that really have a big effort in helping small businesses, providing grants to those organizations, that really do a lot of good work in the community to help small businesses get to where they need to get to. So that's what we've taken initiative in trying to, in addition to everything else that we're doing, but specifically to this, that's our way of looking at it. So when we look back, we're now tracking this over the next 4 years, to look back and say, okay, that $1 billion commitment, what's the impact that it has, and how do we build on that moving forward?
Thank you for that.
Paul, I'd like to jump in. We talked about our Lift Local program, and it's just one part of a larger community plan. So when we bought TCF a year and a half ago, the goal was to really do something bold and really put out a plan that really wasn't all about philanthropy. A lot of people hear about our $40 billion plan and they assume it's going to be a lot of checks that are going to be issued. It's really working together with this community. So we partner with Invest Detroit, we partner with so many other great CDFIs, and then so many other community service agencies, because we can't do it on our own. There's no way we could take $40 billion over 5 years and put it to work with just the people that we have. And at some point, we talked about relationships earlier. It's about the relationships that we all build within the community. So a lot of us work together. So there's projects that often take place where we stack up the financing and the capital that gets used for these projects. So one way that we're also tracking is the Lift Local. So Lift Local has already closed in our market about $3.5 million of loans to about 48, and we do have a diversity and women and veteran-owned focus for that particular program. But the thing I want to make sure this audience knows is that these are startups. Banks sometimes are not accustomed to lending money to people who are just starting out, and really these micro programs and some of my partners here, we want to get people off to a great start, and that's where the education piece comes in. We pay a lot of the SBA fees on the particular program that we have with Local as well. But we're eager, and I know that there's the need. That there's a definite need in the city of Detroit. I really appreciate Jason's comments about focusing on Detroit, because I think all too long some of the institutions have focused around Detroit and have met their CRA goals and been able to get their excellent rating without doing the work that really needs to be done in the city. And one thing about our community plan that I just mentioned, there is a carve out for Detroit. So Detroit and Wayne County has been allocated $1 billion over the next 5 years. And we're going to track that ourselves. So we hold ourselves accountable to make sure that we're driving those numbers where it's most needed. And we feel Detroit, our new co-headquarters for our commercial bank, is what we're committed to.
Hey, Paul,
Excellent.
if you don't, I'll jump in. Can you hear me?
Yeah, we can.
Right. I just want to piggyback off of what the gentleman has stated, and it's really about relationships, as we talked about earlier, but more so also collaboration. And I think you heard some of that being weaved into what Mohammed and Eric just talked about. I would like to commend, Muhammad and his institution, Bank of America, back in 2020. They became an investor in First Independence very early on in the heart of the pandemic. So I just want to acknowledge that. And Jason's organization, Chase, is a preferred shareholder. And so those are the kinds of efforts that, as Muhammad illustrated, that we're going to need as we think about this on a collective, more collaborative effort. And so we've also worked with Eric on some issues in Huntington. But the point I'm making is that it's going to take exactly what the Detroit Chamber is doing right now, convening a group of individuals to talk about who may be in their different corners, to talk about a topic, to figure out how can they work on these things collectively, even in the midst of competition. We can do that fairly and hopefully make a difference. So I just want to conclude with that.
Great. And I have tons of more questions, but I do want to make sure that the audience has a chance to ask a few questions. I saw one question pop up earlier, and it was about building relationships, especially with underserved businesses in this virtual environment. So that was, I'm sure, a shift that you guys had to make. A lot of the marketing accessibility was based off of place-based brick and mortar locations. But how did you guys have to shift, and how's the experience been in continuing with your relationship building in this environment?
Well,
Paul,
I think it's been great.
Go ahead, Jason.
No, I was gonna say, I think it's been great. I think all of us professionally and personally had to, as we got on 20 minutes early to work out our technical difficulties, I think we all had to learn how to engage and embrace using technology and webinars and Zooms and Teams to be able to effectively reach family members and check on people, to host and stand up community events so we wouldn't just cancel them because of the pandemic, and working within business. I mean, many of us are working from home. Everybody here's in the office today, I can see, but you do this 12 months ago, I would see Eric's office and Muhammad's home office, or Muhammad's home office, and you see my home office, and you see my kids running behind me. So I think we're all comfortable now with the idea that we can break down the barriers of the traditional four-wall banking institution and just say, hey, we're human beings that are here to help each other, right? And we don't always have all the answers, and it's my job and Ken's job and Eric and Mo's job to cut through all the bureaucracy that our companies tend to create. Easy for Ken because he's at the top of the hill, but for the rest of us, we have to sometimes fight other outside forces to make sure that we get the resources to the people. So I think technology has helped us transition to that, but we can never take away from the one-on-one, face-to-face, handshake, sit down, let's talk about it and see how we can help you. We can never walk away from that fully, but we have to have the optionality to be able to do things in the way that we're doing it right now today, because we're going to reach way more people today. We're up to 123 people. That's way more people than if we were to do it one by one. Now, these 123 people that are here can now walk to any of our locations and call on this conversation, and somebody's going to know, okay, we got to sit down and help them, right? And that's what we want to accomplish and get done over the next several months and years.
Mo, I think you wanted to jump in.
Yeah. To add to that, I think Jason makes a great point. You look at today I look at the attendees, 123. What comes to my mind is, pre-COVID, if this was a physical setting, how many would have been able to make it out to this event, and listen in and be a part of this? And that's been a common theme across everything that we're doing. So when you think about small business pre-COVID, the way of doing business was I get in my car, I drive to my business, to a business owner, and we meet face to face for a conversation. But for that specific business banker, that could be getting to 2 or maximum 3 clients in a day. And when we went, post COVID, now everything went virtual. Even our clients, even today, as we want to go back to that face to face, we keep hearing our business owners tell us we'd rather meet over the phone, via WebEx, Zoom. It's just easier for us that way. So what we started doing is, instead of touching 2 clients a day, we're touching north of 10 clients per day. And so we're touching a lot more businesses and be able to provide, the resources that they need. So it's been a benefit. It's really worked in a very good way, to the point now where we question how much do we really need to get out there I know myself, I've driven to my office out in Troy, and it's been an hour drive to get there, an hour back with traffic and whatnot, and I felt like I wasted my day because at that time it's usually spent really getting a lot of work done. So it definitely, there's been an adjustment, and it's been in a positive way as well. You know, we definitely want to get back out there and that face-to-face, but I think it's going to be a good hybrid as we move forward on how we're going to do this to be more effective.
Yeah, I'll jump in and say it's an and. We got to do both. It's a conjunction and.
Mm-hmm.
I'm enjoying seeing you guys. I know you can't see me right now, but I can see you in 2D. You look great, but there is nothing that substitutes that 3D touch. And whether it's sometimes, being in the office or being after hours, et cetera. And so I'll just tell you, I've got a customer coming in. My next meeting is a customer coming in and just really doing some relationship building. There's no substitute for that, I don't think, long term. So my belief is it's going to be more of what Mohammed said. It's a hybrid. It's going to be and.
In my add to that, Paul, is hybrid. Hybrid is the term that we've been using so often, and it's, office setting hybrid, it's technology in person, and just adapting. I think all of our staffs are just incredible. All of us who have branches, I mean, they're our front line, and they've done a wonderful job of taking care of our clients. And we owe them a lot, having gone through this two-year period. And what I'm trying to promote is that with our branches having been there the whole time, I just want to show them a lot of support. For a while there, we weren't even allowed to go in there because we didn't want to cross-contaminate if there was a COVID breakout. But now we're going in, and we want to make sure that the business bankers are helping them, assisting them, and really giving them all the support they need. And then one other twist that we've had, and I'm sure my competitors, friends have had that as well, is a lot of these accounts are getting open online. So we're getting new accounts that are popping up in the system, and we don't have any interaction with them face to face. And it's a little bit of a challenge, and we're working on developing some technology to get back in front of that client and try to bring them in technology wise or even face to face at some point. So just another curveball that we all have to deal with, but we will adapt and we will figure it out.
So I want to throw a disclaimer out there. We have a ton of questions and we're not going to get to them all. Some of them are rather specific, so I'm going to pick up on a few themes, but there will be, we'll collate all these questions and make sure we get answers for them. It just may not be in a live setting. But I see a common theme that's popping up. And the audience wants to know what type of businesses are you, do you target, industry-wise, size-wise, et cetera? And there's also a specific question around which of your organizations are able to engage with and work successfully with startups. So Eric, maybe you could start off with that because you specifically mentioned you work with startups, but giving the audience a general flavor of what type of, and this is again leveraging what Mohammed said, knowing which institution is the best. So giving them a flavor about where your sweet spot is, and maybe that creating some traction.
Sure. Being a national organization, the one area that we at Huntington are staying away from is marijuana. So given that it's legal in Michigan, but it's not a nationally legal platform, that's the one industry that we're avoiding at all costs. But I would say that it really doesn't matter. I mean, when you get into some of our larger clients, we do have specialties. We have a large franchise unit. We have a healthcare unit. But when you're talking small business, it really doesn't matter. We really want to educate. We want to make sure. Mohammed used one of my favorite terms: cash is king. You want a business that makes money, and there's definitely nonprofits out there that we all support, and they're designed not to make money, and that all their money goes to the cause that they're after. But I think cash is king when it comes to having a good business that can support your family, pay your bills, and pay your banking institution for any capital that you may have raised, and just helping them figure that out. And again, the educational piece is so key to figuring that out early. It's better to know early if there's something wrong with the model and the cost of the material is too great for the value that the client is willing to pay. So I can't express that enough, that working with your advisors and working through whatever support you have to make sure that it's a viable business.
I'll step into, as far as Bank of America goes, I love what Eric, what they're doing at Huntington with startups. I think I've personally referred, several business owners that are looking for a startup fund to Huntington because I know they got a great program there. So, with Bank of America, there's a lot of industries that we work with, and that list is north of 200 industries. So, I won't name them now, but what I would say, I think it's to a high overview. For Bank of America, I think we're more in the owner-occupied space, right? So we're not in the investment property. Not to say that we can't do it, but that's not our specialty. And more so, when you think about your business, for us, we're more focused on a more digital business rather than a cash-heavy business. So if you're in a particular business that operates heavily with cash, we may not be the best bank for your business. But again, are you operating with cash with the ability to go more digital, or is this only a cash only business? There's not much wiggle room there. I think it comes down to that. But if you're in any kind of business that's a little more digital, I think it favors to what we cater to.
And Jason and Ken, did you guys want to provide some guiding points?
No, absolutely. Like I said, for us, not too much different from industry standpoint in the small business. What I love about what we do, when you come into our branch or when you meet our small business team, they'll get you to the right place or the right resources if you have a strategic focus within your business. If it's healthcare, or if it's something else that's a little more dynamic that we need to speak to, we'll get the right people. And sometimes we'll call in our partners from our middle market commercial banking team to assist and help on the business bank, because they go up to about 20-25 million in revenue for small business, and then above that it goes up to our commercial bank. But it's a collaborative approach to really make sure that you get the resources you need. As far as helping with a fledgling business, like I said, for us it's the resources we provide. A lot of times, and going back pre-COVID, we were at the first table with the Entrepreneurs of Color Fund to really help stand up fledgling and startup small businesses to help create in the capital stack, maybe not a traditional loan, but a chance to get funding and to begin the process of maybe getting to a traditional lending institution after you started off in our Entrepreneurs of Color Fund that we partner with LISC on. So there are many ways where it may be not us directly, but we have funded Invest Detroit, Capital Impact Partners, LISC to kind of help us get those businesses back to us down the road. So deploying capital, whether it goes to another institution that can take care of the resources or the expectation of the customer now, often feeds back to us later.
Paul, one comment I want to add as well, just real quick, is when we're talking about banking a business, I guess to make it a little clear, because I don't want the audience to walk away feeling like, okay, I can't bank there. We're talking specifically access to capital. Obviously, if you're any kind of business, you want to open up a checking account, savings account, establish even a credit card and merchant services, all that can be done, for most industries out there. But when it comes to access to capital, this is where it gets a little more granular as far as the industry type that different banks have appetites for. And one last thing too, I want to add on there too is, again, in our industry, we collaborate. So we understand what Huntington and Jpmorgan, First Independence, TCF, and the different banks out there, they're doing to really help in their own individual ways. So a lot of times what we do is we guide our clients to go to this specific bank based on your specific needs. Just like if you're a business owner and you're, let's say you have a hair salon, right? And someone's coming to you, you may not necessarily have the product, but based on what the problem is, you can recommend them where to go because that's what you specialize in, And so it's our job to understand what our competitors specialize in to help. Ultimately, we all have the same common goal, is to help that small business owner no matter what, to get them to grow.
Yeah, Paul, I'll jump in there on behalf of First Independence and say our intent is really to help create wealth accumulation for those business owners. And in some cases, just as Mohammed mentioned, if it's a salon owner, maybe they're renting that space, maybe they can find a space that they can buy. That's where we come in. We do a little bit more hard asset lending than just typical receivables, et cetera, in terms of a business perspective, because of a bank of our size. our balance sheet has a lot more sensitivity to it, and I hope that's not overspeak for the audience. But the point I'm making is, as Muhammad, and I think Jason and even Eric may have talked about this, we find ways to partner on deals and get you to who can help you best, is the way that I would sum it up. And we all know SBA and Eric's team is probably one of the best of this panel that's sitting here and what they do. We don't do a lot of SBA loans because they have challenges associated with them in terms of documentation, et cetera, to create the guarantee. But for us, we will partner and send those to other banks. And so we can still be your banker without having to necessarily execute on that. So that's the best way I could sum it up.
So I have to hand back over the mic in 2 minutes, but I'm going to ask all of you to later provide links to any resources or programs that you think would be great for this audience. Is there one or two that you guys, so the audience will get a whole bunch of links, but are there one or two programs that you might want to highlight before I turn it back over to Tammy? Very, very quickly, so people know what to look for.
Yes, I'll give one now.
Go ahead, Jason.
Okay, I'll knock this out in 10 seconds. So the Detroit Hispanic Development Corp and Chase Bank, we've been providing monthly financial health education workshops. They're facilitated by our Chase community team. They're the last Friday of every month. So the topics include credit building, budgeting, taking your business to the next level, and home ownership. And the next workshop is Friday, March 25th. So it's coming up in a couple of weeks. It's at 6 p.m. I'll provide the information on the location. I'll get you all the information as far as who to contact and who to reach out to. But the last Friday of every month, we have this workshop, and we get typically 40 to 50 people show up for it. So I'll get more to come, but I think that's one that's coming up, so it's relevant to the topic, and there's enough time for you to register.
Great.
Hey, Paul, I would just put a plug in for Detroit Means Business. I know you guys were involved with that and some of the others on the phone, but Detroit Means Business was something that was set up by the city of Detroit as a resource center. Our Lift Local program is built into there. I know I've seen Bank of America information in there, and Jason, I believe you guys do as well as Kenneth. So it's a great resource with a lot of tentacles out to the community. So thank you for putting this together. Really appreciate it.
Great. We got time for one more maybe before I, at risk of losing my job.
Well,
so.
I'll do mine in 10 seconds. Just for the audience, write down Better Money Habits. And then just reach out to one of us at Bank of America and we'll tell you all about it. That's a series that we have for small business owners on how to, manage their budget and different kinds of things that we have out there. So Better Money Habits.
So for us at First Independence, it's firstindependence.com. And I would just end by saying, we don't need all of your money. We'd love to have some of your money.
Look, this has been amazing. I appreciate it. I'm going to hand it back over to Tammy, but thank you so much for all the insight and all your initiatives that you guys are doing. Really, really excited and happy about that.
Well, I would agree with you, Paul. And I want to thank this panel, Eric, Mo, Ken, Kenneth, and Jason. This has been a fantastic conversation. And really brings out the importance of DEI for small businesses. And special thanks to you, Paul. You are just such a tremendous moderator. Your knowledge, obviously, in this area helps to bring out all the great conversation from our panel. I want to reiterate what Paul said to you when I mentioned earlier about the questions that were submitted. If an answer was not provided, we will be taking all these questions back to the panel, and then we'll get responses, and then we'll post it back on the website under the area I mentioned to you before, which is detroitchamber.com/equity. And I saw some really great questions in there, so we'll make sure to follow through for you. Once again, I have to thank our sponsors, Blue Cross Blue Shield of Michigan. They've been a sponsor of the entire Black and Diverse Owned Business Series. We thank them so much. And again, I mentioned our partner, Michigan Economic Development Corporation's Pure Michigan Business Connect for their promotional partnership of the series. But also, please remember, there's going to be some upcoming programs with the MDC to assist small businesses with accessing procurement opportunities. We'll be doing more programming in the coming months. So again, just please make sure to watch the website or watch your communications that come out from the Detroit Regional Chamber so that you can keep in touch with all of that. And so again, thank you to our panel, Paul. Thank you to you for your excellent moderation. And I thank all of you for joining us today, and I hope you have a wonderful day.
Thank you.